Most traders use indicators that banks don't even care about, but there's one tool that big institutions, big banks, and big players in the markets actually rely on. And it's not to predict where the market is going, but to execute their orders, and it's called VWAP. And today I'm going to show you how order flow traders can use the same logic that banks do with real trades that took this week. So you can finally understand where smart money is, where fair value is, and why price reacts the way it does. By the way, if you're new to order flow and if you actually want to learn how banks actually think about volume, liquidity, and execution, I'm running a 4-week order flow bootcamp. I'll talk more about it later in the video. So let's get into it. What is the VWAP? VWAP stands for volume weighted average price. It basically tells you the true average price of the session based on where volume actually traded. And the reason why banks use it because they need it to execute massive orders without pushing price too high or too low. It'll tell you where fair value is at the VWAP, where discount is under, where price is expensive, premium zones. Okay, what we need to know: below VWAP is discount, above premium, far from VWAP is way stretched either direction, and return to VWAP is pretty much rebalancing. So this is the foundation of understanding smart money behavior around the VWAP. Now let's get a little deeper into what problems banks have and why they execute the way they do. Okay, first of all, banks don't have an edge problem. Retail traders do. Okay, banks have a deployment problem, and why size, not signal, decides how smart money trades. Retail problem, we look for an edge, small size, we can enter anywhere, we can exit anywhere. There's literally no impact with 5 lots or 5 contracts, 10 contracts, 15 contracts. Okay, banks, they have a big problem. They have huge size, they have to execute carefully. And let's say you're at the bank, okay, you get an order for $500 million, and banks have to buy and sell every day, otherwise they just won't make money. Simply, they have clients that they look up that look up to them. They have to execute these orders. So let's say you get an order for $500 million. Okay, they will try to, they can't buy all 1,000 contract order, 2,000 contract order at once. Why? Because they're gonna push the price up or down so high. Okay, they want to make money off it as well. They get an order, they want to execute at certain price levels. They'll go 10 contracts here, 20, 30, 50, 100 contracts up, down. That's why when you see it on the VWAP, it's moving. So banks, what they do is they will execute. Let's say they get an order, they will execute right here. They'll buy under, right under here. They'll buy 10 here, 20 here, 50 here, 100, and they'll try to get as fair of a price as they can. Okay, now let's say you got a buy order and you're executing up here, you're gonna get fired. Okay, if you get a buy order, you're executing in discount, most likely you'll get a raise, and that's what their job is, and that's how these algorithms work. They will go, that's why around VWAP price is chopping around so much, because all these algorithms are trying to get their orders in, and they're trying not to push price up or down too high. Retail guys, they're chasing moves, okay, and they're reacting after every candle that's closed. They're emotional, impulsive, poor entries. Banks, they're patient, they wait, they let price come to them around the VWAP zones, and they're patient, systematic, and they have way better execution. Regardless if they have 100 million or 200 million to deploy, it doesn't matter. So these are kind of the steps that go. They get a direction from the analyst, and the algorithm chooses the VWAP zones where to buy and sells. Those orders are sliced into micro orders, thousands of mini pieces. If you ever look at Bookmap, you can see those bubbles. If you zoom really in, there's algorithms putting 1 lot, 2, 5, 10 every second, every millisecond, and it all gets executed around VWAP. And that's how they avoid from market going 2 up or 2 down. So I think the key takeaway, what we can take away from this, is that banks already know the direction. Their challenge is deploying the huge capital, and that's a problem we don't have, and that's a very good thing. So VWAP is kind of like the compass, execution is their edge, and we'll get into some live examples just now. Let's look at this chart. This chart is from July 17th. Look how price pre-market, this blue line is the VWAP. This is the first deviation, second, third. VWAP, first deviation, second deviation, third deviation. Look how we are respecting this VWAP. We test it once, 2, 3, we fail. We touch second deviation, and we react back up into the first deviation, come back, test it again, and we fly way above VWAP. We break it with force, and now price again, look what it's doing around the VWAP. Chopping, they're building their positions. Okay, up, down, up, down. Some days you will get those nice reactions. Like look at this reaction. We go above VWAP, test the VWAP again, go up. This is where you kind of find your trend. This is your trend. We break, test it again, go higher. More people come in, add into their positions. We go up, add above VWAP. Okay, now what happens? We test this first deviation once, twice, three times. We try breaking above. Look how many times we try breaking above first deviation. We can't. We come below. We get below VWAP. We test VWAP again. Come down to -1 deviation. Try going up. Doesn't work. We come test it again. Try testing the VWAP. It's not working. We break below the first deviation. I mean, this goes on for days. It's happening every day. Market opens right here, 6:30. We test the VWAP to the upside. We fail. We come below. First deviation, second deviation, we hold. Go above VWAP. Test the VWAP again. First deviation. 1, 2, 3, 4. How many times? Look how many times we test the zone. Come back, test the VWAP. We try to test it again. Fail. Come test the VWAP. Go down again, test the VWAP. Look how magical this tool is. It hugs the VWAP so nicely. If you implement this into your trading, it'll be a night and day difference. Let's go day back again, July 15th. We go test the third deviation, fail, come back into VWAP, fail, first deviation, go. I mean, this can go on for days, again and again and again and again. Let me show you some live examples. So this is my live trade from July 13th, simply because we were under VWAP and we respected, there's some kind of demand zone here. And in my head, I know that, a lot of people will start buying into this. A lot of banks will look at it. A lot of hedge funds will look at it to push price up. We got trap sellers. Okay, let's play this. Look how beautiful this trade is. You got people trying to sell near VWAP. You got buyers trying to push price up. And that was like I think it was a 3-hour trade. And these are not just some cherry picked examples. These are actually live trades that I took this week. Now let's get into another example. Another trade that I took. This is on July 14th. Same thing. It's just a VWAP test. Okay, we were way too stretched. So where's the best prices near VWAP? So let's look at this. Want price to leave pretty quick now. I'm risking 250 to make about 2-3R. Yeah, make about 3R. Another beautiful trade from VWAP to the first deviation. Simple. Now, if this is starting to make a little bit more sense after I showed you 2 examples, and if you really want to learn how VWAP connects with delta, absorption, imbalances, and liquidity, that's exactly what I'll cover in week 3 of my Orderflow Bootcamp. It's beginner friendly, so you don't need to have any advanced knowledge, and I'll show you the flyer at the end so you can make a decision. Now, let's get into, I'll show you 2 more trades from this week. This trade is from July 15th. Okay, this is the VWAP. First deviation, second, third. We're so far stretched. Okay, so we got, what do we have here? We got trap buyers. Look at these buyers that are coming in. I'm gonna try to sell. I take a sell. I'm risking, I think, 250 or something like that. And literally, I went from third band to first deviation. Simple. All I'm using is VWAP and some other tools to get my context, to align my story or the market sentiment, And I'll show you one more. This is from July 16th. Okay. Now, you have to have a narrative, you have to have his market sentiment, where the market is going. You can't just click buy and sell just because it touched a line. There has to be a story behind it. Okay, let's play this trade. Seeing a lot of selling coming in. I'm gonna try to sell here. That's the VWAP, the red line. Take a sell, risking about 250. We get under this deviation band. I am out. Seeing a lot of selling. And that was it. Simple as that. I use this every day. It's one of the tools that just can't live without anymore. It's helped me so much. It has helped me become profitable. And if it wasn't for this, I probably wouldn't be profitable, to be honest with you. I can show you so many more trades. I mean, VWAP is just not good for reversals. It's actually good for continuations too. And I've taken some trades the prior week, but I don't want to keep showing you trades because they'll just keep repeating. It'll be the same thing again and again. And the final takeaways I think is VWAP is one of the easiest ways for beginner order flow traders to understand. It's easier to know, pinpoint where fair value is, premium, discount, trend structure, reversion targets, institutional behavior. Is really effective. I think everybody should use it in their trading. And if you want to learn order flow properly, not just indicators, but real logic, I'll show you. So yeah, this is my 4-week program for the August. If you want to learn order flow properly, not just indicators, but real auction logic, join my 4-week mentorship. We'll cover week 1 auction market theory, order flow, volume profiles. Week 2 using profiles for higher time frame narrative, gamma levels, building points of interest. Week 3 footprint charts, everything that matters, the tools like VWAP that I use. And week 4 will be SLS, story, sentiment, location, and signal. And outro will be trading psychology. If you found this breakdown helpful, please hit the like and subscribe button. This helps way more than you know. Make sure you subscribe, and I'll see you in the next video. Bye guys.